Other sources of gold were repayments made by the IMF's borrowing members, who sometimes used gold to repay the interest and principal on their loans.
Hello, my name is Lars Schall. I'm a financial journalist from Germany, and I'm now connected with the author of this book, which is written in German, and the English title would be The Secret Gold Policy. And the author is Dimitri Speck, who sits now in Riga, Latvia. Hello, Mr. Speck.
Hello, Mr. Schall.
To begin our interview, I would like to ask you what happened on the 5th of August 1993.
On the 5th of August 1993, the systematic interventions against the rising price of gold started. At that time, the central banks had decided to cap the price of gold at the level of 400. They didn't want to allow the price to stay above this level. And at the days before, gold has reached this level, and so the intervention started, interventions which continue until today.
How could you prove those interventions?
There are many proofs for these interventions. First of all, the interventions are visible in the price of gold itself. Sudden drops occur quite frequently in the price of gold, meaning that without any reason and without any connections in other markets, the price suddenly drops, let's say by $10 or $20 within a few minutes, sometimes even within a few seconds. And this happens in this frequency only in gold and also in silver. And you can prove, or you can check, that before the 5th of August 1993, we did not have this pattern. And now we can prove that there is this pattern, because one reason for this, how you can prove this anomaly in the gold price, is that these drops occur quite frequently at a specific time intraday. For instance, at PM fix, or in the past it was at New York close of the COMEX and times like that. And at there you can see this intervention directly. But this is not the only proof that we have.
What are the motives for the intervention?
The original motives were are quite clear, because at that time the Fed governors spoke more openly about the role of gold, and the key reason, the key cause at that time was that the price of gold did rise, and the Fed did not want that this thermometer of inflation, as Greenspan, the former Fed governor, the former chief, named it, should not continue to rise. Yeah? But there are other reasons why the central banks don't want, or by the US Fed especially don't want, that the price of gold rise. That this is a stronger dollar, for instance. This is lower bond rates. Yeah, and of course, especially in time of crisis like 2008 or the euro crisis, they simply want to calm down the markets, because if in such periods the price of gold would explode, yeah, then the people would start to panic even more, and the central banks want to prevent this behavior.
Yeah. What are the means to intervene in the gold market?
So the first mean, of course, was or is normally selling of gold. Yeah. But the central banks are not selling gold anymore. The second mean is the gold lease. Yeah. The central banks were lending quite a lot of gold, also increasingly beginning in the August of 1993. And if gold is lent out to so-called bullion banks, or also hedge funds, for instance, it's finally being sold to the market, and this has the same effect like selling gold. Yeah. But also this mean is nowadays not that important anymore. So we have a third mean, and this is these sudden shocks, which I already mentioned. And this mean is, from the view of the central banks, a quite cheap mean, because they don't have to sell any gold or to lend any gold. They simply sell it quickly like a blitz, like a shock, and they hope that other market participants follow this price drop, and so they can probably cover their costs in this regard by this mean, if they use this mean. This is quite different because gold is a store of value, and it's quite different compared to, let's say, crude oil or other goods which are being used and consumed, where it's a consumption. And if you change the behavior of the investors through these sudden price shocks, then you can reach the goal that the price will not continue to rise. This is the idea behind these price shocks.
Yeah. Can we actually see the leasing of gold in the balance sheets of the central banks?
Central banks are hiding a lot of information regarding gold. For instance, in some places in the world, like Germany, they hide the location where the gold is stored. Then they don't check the inventory of gold. Is the gold really there? Also, this is a strange behavior of central banks. And the third is they don't publish, or most central banks do not publish how much gold they have leased out. That's very strange because if you look at the national law, for instance, in Germany, they should state this information, but they don't do it. Most of them. Two are doing it. This is Switzerland and Portugal. But most central banks are not showing these figures, how much tons they have leased out. So we don't have official data of the amount of this gold, how much is leased out. And of course, the speculation how much it is totally different. Conservative estimates, for instance, in the year 2000, have already been 18,000, have been 2,000 to 5,000 tons, and more not so conservative estimates had already been 18,000 tons. That would be about half of the gold that the central banks have. This already in the year 2000. But this was too high. I guess in the year 2000 it was something like 6,000 to 8,000 tons of gold. This is 3 annual productions. This is still quite a lot, and that it dropped since then slightly, a few thousand tons, not too much.
Yeah, you have already mentioned the German gold reserves. What has happened to the German gold reserves that are located at New York City?
The German gold reserve, that's an interesting story. And the US originally had more than 50% of the world monetary gold after the Second World War. And the Germans had the US had a deficit at that time, a balance deficit. And at that time, it was they had to pay, of course, in gold to other central banks. And since then, the German Bundesbank did accumulate gold and store it in New York, which was at that time, of course, the trading place also for gold, the New York Fed. But we don't have any gold standard anymore since 1971. Since 40 years now. And the other reason why New York was a quite good place for the German gold was that it is safe in the Cold War. It was a safe place compared to any storage place in Germany, of course. But also the Cold War is no longer since 20 years now. And since then, there is no real good reason to keep 2/3 of the German gold That's that much in the US, in New York. And interestingly enough, the German Bundesbank, if you ask them why is so much gold in New York or in other countries, they say one time this reason, and a few years later they say another reason. And none of this reason is really a good reason, and it's obviously something is strange here.
Yeah, could it have been leased out?
Of course, if there's no control, we don't have any proof what happened with this gold. In my opinion, it is not leased out, but anyway, the Bundesbank should follow the law. The Bundesbank should also clearly do what makes sense, and it does not make sense, in my opinion, to store so much gold in a foreign country. There are no other countries who are storing so much their gold in Frankfurt, so there's an asymmetry. And as I told you, there is no reason anymore to store so much gold in another country. Yeah.
Related to those strange accounting rules that central banks follow with gold reserves, would this be able in ordinary business?
No, clearly not. Yeah. For instance, in Germany, as an example, where I know the national law best, there must be a strict difference if some good like gold is physically stored or whether it's lent out. There's no doubt. And the German Bundesbank has to follow this law. There's no question about this at all. Yeah. The German Bundesbank can make exceptions, but none of these possible exceptions are here in existence. It's simply that the German Bundesbank does not follow the law. And I guess in most other countries, the laws in this regard are quite similar. Yeah. And the behavior of the central banks in this regard, it looks like a club. Yeah. They ignore a little bit the national interests, they ignore a little bit the national laws, and they behave like a club where you follow your own rules. And this is quite strange in my opinion. Yeah.
Even though Western central banks like to see a low gold price, the gold price is rising since 2001. Why is this the case?
We have different periods in the suppression scheme of gold since it was invented in August 1993. First, the central banks did simply kept the price. You can even see it clearly in the chart. You can see this figure also, for instance, in the text of the Fed transcripts of that time. Yeah. And then in November 96, the price did start to fall, which had a specific reason, which is not directly connected with the will of the central banks, but with the wish of the partners of the central banks, which were short in gold through this gold lease, and they did benefit from the gold lease. So these partners, these bullion banks, started to ask the central bank to even sell more gold and to lease more gold out, that the price starts to drop even more. Yeah, and this was not the interest of the central banks anymore, but the price did fall even more, because everybody in this bullion bank field did know the price cannot rise, so you can simply increase the lending and press the price down. Yeah, and at some time in 99, when even the British gold was sold under very strange circumstances, the central banks started firstly to say it's enough. We don't want that the price falls even more. Yeah, this was the time of the Washington Agreement on gold, for instance, when they did the second time give a sign to the public in this direction. Yeah, and in 2001, in May 2001, the Fed did decide that the price of gold cannot be kept at this level anymore. And they decided that with the end of that year, the gold price can rise. And they did tell this to some of these bullion banks, that they prepare the book for a rising price. And since then, since May 2005, or then the end of May 2001, or the end of 2001, when it finally did start, the price was not kept at a specific level anymore. It was the central banks did simply take care that it does not rise too fast. So we have these three phases of central bank policy on gold since the systematic intervention did start in 1993.
In fall of 2008, the gold price had a significant drop. Why did this took place?
This is quite likely also, this follows quite likely also from central banking intervention. In 2008, we had the panic in all markets. Everybody did fear that, or many people did fear that the money will go, that the banks are not safe, and so on and so on. There was a real panic, and this panic let the people flee in gold. You can see it, the coins were not available anymore. Even the bullions, the bars were not available for weeks. Yeah, and also in the ETFs, for instance, where probably, or most probably, there's physical gold used, at least officially, there was an increase, a flow into this ETF. So finally, there was a huge demand. And the price did drop at the same time, and this is illogical. And if some people state that this follows because other market participants needed liquidity, this cannot be correct, because if somebody would have sold gold for this purpose, this gold had been available, yeah? But there was no gold available for weeks. So this is clearly not the reason, and the only conclusion is that there have been heavy intervention. We can also have statistical proof for that, because in 2008 these sudden drops of price, where within minutes the price dropped by $20 or some amount like this, did occur much more often than in other years. Yeah, and we have also a sign, not a proof, but an indication that in 2008, the central banks did start to increase the lending of gold again, whereas in the years of 2001 until 2007, they did reduce the lending of gold. Yeah, so everything, every sign in the market and around gives us a sign that there have been heavily central banking interventions for the purpose not to allow gold to rise above 1,000 at that time.
Yeah. At the beginning of 2010, Mr. George Soros said that gold is the ultimate bubble. How do you think about this? What does he actually mean by that?
This was not absolutely clear. When this article appeared in some magazine, the headline of this article was different than what Soros actually said. Soros, if I remember correct, said something that the ultimate bubble will be gold. So he did not say that gold is already in a bubble. Yeah, and in my opinion, gold cannot be in a bubble like it's like I would define a bubble, because in my opinion, only goods can be in a bubble. And if the price of gold rises too fast, then I would not call it a bubble, because gold then is becoming more and more money, a store of value, and this would be more a sign of the problems that the currencies do have, the paper currencies. Yeah, but if you say it like in the stock market, that a bubble is just a quick rising price, yeah, then gold can go into a bubble, of course, but this has not happened already. Yeah, we will very likely still see here some movements up, or at least until now we didn't saw really fast price movements in gold as we have seen, for instance, in the US stock market or in some stock markets around the year 2000, or in gold in the 80s, or in other fast price movements. We don't have seen such movements yet.
Yeah.
Will the volatility in the gold price increase in the years coming?
Currently, we still have quite static rise, yeah? Which, in my opinion, comes from this interventions all the time. And the question is now, what happens in the future? We have possible scenarios for the future. We are in an indebted world. The world is much more indebted than, let's say, in the 60s. The debt compared to the GDP worldwide is 260% about. And this debt on the other side is claim, and we have the financial crisis since 2008, which is about these claims, and nothing is solved yet. History shows us that there are several outcomes of this indebtedness. One would be deflation, that's traditionally. If this would happen, I don't guess that it will happen, then gold can even fall, we don't know. Then we have a scenario like Japan, where on the high indebtedness since the 1990s, everything went sideways, yeah, and the consumer prices, but in the stock market or in the real estate market, the things did drop. I also don't think that this scenario is likely, but in this scenario also gold could drop. And then we have other possible scenarios. These are, for instance, more inflationary scenarios, which in my opinion are most likely. Whether they will start soon or in some years, I don't know, but they are most likely because the central banks and the politicians try to avoid a recession and a deflation. Then we could see much faster rising gold prices, and that the central banks will not be able anymore to keep the price low, yeah, or to keep the quick rise. Or they might be able, but they also don't want to lease out all gold or to sell all gold. So in this scenario, which I think is most likely, we will see higher volatility and higher gold prices.
Yeah. One last question. As a technical analyst, you also took a critical look at the silver market. Is the silver price also a subject of interventions?
The silver market clearly is also a subject of this anomaly, these shocks, which are definitely independent from the gold price shocks. So they are separately done. Silver does not only follow gold, it has its own life and it has its own interventions. And interestingly, when the silver did rise in the period until May 2011, about 14 months in this period, you could not see the sudden shocks. Yeah, you could see them sometimes, but you could not prove them in the way as I do it statistically. And in the period thereafter, in the year 2008, you had them quite often. So this is quite interesting. Maybe this is also something which will happen to gold, that we will see rising price, let's say for 1 year without interventions, and then they start again. Things like that might happen.
Mm-hmm. Okay, I thank you very much, Mr. Speck.
Thank you too.
Other sources of gold were repayments made by the IMF's borrowing members, who sometimes used gold to repay the interest and principal on their loans.